Hello guys, welcome to i-tutor Academy. In today's session, we will start with the Unit 10, Subsection 5, Classification of Budgets in MMPC 004. Budgets can be classified into different categories on the basis of time, function or flexibility. So these are the categories: time, function and flexibility. Under time, there is long-term, short-term, current, rolling budgets are there. Function: sales, production, cost of production, purchase, personnel, research, capital expenditure and master, etc. And flexibility, there is fixed and flexible budgets are there. These are the categories of budget. Rolling budget. Some organizations follow the practice of preparing rolling or progressive budget. In such an organization, a budget for a year in advance will always be there immediately after a month or a quarter passes, as the case may be. A new budget is prepared for 12 months. The figure for the month or quarter which have rolled down are dropped, and the next month or quarter figure month or quarter which have rolled down and or are dropped, and the next month or quarter figure are added. So there is an example also. Sales budget. Sales budget generally forms a fundamental basis on which all other budgets are built. The budget is based on project sales to be achieved in a budget period. Organizational factors also, environmental factors also there, and illustration for the same also here. You just go through it. It will help you for your final examination. And production budget. This budget provides an estimate of the total volume of production distributed product wise with the scheduling of operation by days, weeks and months, and forecast of the inventory of finished product. Generally the production budget is based on the sales budget. The responsibility for the overall production budget lies with the works managers, and that of departmental production budget with the departmental works managers. So activities are here based on the same. You just go through it and try to answer this. And production cost budget is there. There are three elements of cost, namely direct material, direct labor and overheads. Separate budgets for each of these elements have to be prepared. The direct material budget has two components: material requirement budget and material procurement or purchase budget. So illustration also based on that. So here is this. And the direct labor budget. Direct labor budget, like direct material budget, may be divided into two categories: direct labor requirement budget and direct labor procurement budget. And activity also here. Overhead budget. The overhead may relate to the factory, general administration, selling and distribution function. Therefore, separate budgets may be prepared for factory overheads, administrative overhead and selling and distribution overheads. And factory overhead budget. Factory or manufacturing overhead include the cost of indirect material, indirect labor and indirect expenses. And illustration also from the same. Administrative overhead budget. This budget covers the administrative expense including the salaries of administrative and managerial staff. Selling and distribution overhead budget. This budget includes all expenses relating to selling, advertising, delivery of goods to customers, etc. It is better to analyze such a cost according to product, type of customers, territories and the sales department. So illustration on based on that. And next one is cash budget. Planning cash and controlling its uses are essential tasks. If the future cash flow are not properly anticipated, it is likely that ideal cash balance may be created, resulting in unnecessary losses. It may also result in cash deficit and consequent problems. The financial manager should therefore plan the needs and uses. Budget is a useful device for this purpose. Okay, so cash budget helps the management in determining the future cash needs of the firm, planning for financing of those needs and control over cash and liquidity of the firm. And sales worksheet. Sales bringing in major part of cash inflow. All sales may not be against cash. Credit sales are pretty common. Each business establishes has its own credit policy for promoting sales. And a performer for cash budget is here. You just go through it and it will help you for more understanding, and illustration section also from the same. Okay, you just go through it. And activity also, and purchase budget format is here and activity also based on that. Master budget. The master or final budget is a summary budget which incorporates all functional budget in a capsule form. It sets out the plan of operation for all departments in considerable detail for the budget period. Fixed and flexible budget. Fixed budget is designed to remain unchanged irrespective of the level of activity. This budget is prepared on the basis of a standard or fixed level of activity. Since the budget does not change with the change of level of activity, it becomes an unrealistic yardstick in case the level of activity actually attained does not conform to the one assumed for budgeting purpose. And here is an exhibit budget format and flexible budget. The flexible budget is designed to change in accordance with the level of activity attained. Thus, when a budget is prepared in such a manner that the budget cost for any level of activity is available, it is termed as flexible budget. And the control ratios. The budget is a part of the planning process. After the various budget, including the master budget, have been prepared, you may like to compare actual performance with the budgeted performance. This can be done by using three important ratios as shown below. Control ratios are activity ratio, capacity ratio and efficiency ratio are here. In activity ratio, it's a measure of the level of activity attained over a period of time. And the capacity ratio, this ratio indicate whether and to what extent budgeted hours of activity are actually utilized. Efficiency ratio is the ratio indicate the degree of efficiency attained in production. So activity is based on that. You just try to answer activity ratio, capacity ratio, etc. And activity 110.6 also there is on achievement, failures, cases for failures are there. So you just try to answer that. It will help you for your final and examination. Next is performance budgeting. As explained in the preceding pages, budgeting is nothing but the technique of expressing largely in financial terms the management's plan for operating and financing the enterprise during specific period of time. Any system of budgeting must provide for performance appraisal as well as follow-up measures in order to be successful. The traditional, also known as line item or object account budget in government enumerates estimate expenditure by type and quantity for a specific period of time, usually 1 year. And in performance budget, precise determinant of job to be performed or services to be rendered is done. Secondly, the budget is prepared in terms of functional categories and their subdivisions into programs, activities and projects. Thirdly, the budget become a comprehensive document since the financial and physical result are interwoven. It facilitates management control. The main objective of PB are to coordinate the physical and financial aspect and also to improve the budget formulation, review and decision making at all level of management. To facilitate better appreciation and review by controlling authorities, that is legislature, board of trustees or governors, etc. As the presentation is more purposeful and intelligible. To make more effective performance audit possible and to measure progress towards long-term objectives which are envisaged in development plan. And next is zero-based budgeting. Earlier we have explained the formulation of different types of budgets and suppose the approach adopted in the formation and preparation of budget is based on current level of operation or activity, including current level of expenditure and revenue. And it may on the other hand create several problems for top management. Some of these problems are programs and activities involving wasteful expenditure are not identified, resulting in avoidable financial and other costs. Inefficiencies of a prior year and carried forward in determining subsequent years' level of performance. And managers are not encouraged to identify and evaluate alternatives means of accomplishing the same objective, and decision making is irrational in the absence of rigorous analysis of all purpose cost and benefit, and managers tended to inflate their budget request, resulting in more demand for funds than their availability. This results in recycling the entire budgeting process. The technique of zero-based budget suggests that an organization should not only make decision about the proposed new program but should also review the appropriateness of the existing program from time to time. And the process of zero-based budgeting are determining the objective of budgeting, deciding on scope of application, developing decision units, and developing decision packages. And advantages of zero-based budgeting is there. Let us summarize the advantages of zero-based budgeting are. Here is the points. You just go through it. It is contended that the zero-based budgeting is time-consuming. Of course, it is true, but it happens only in the initial stages when decision units have to be identified and decision packages have to be developed or completed. And the activity also based on the zero budgeting. And summary of this chapter are: financial planning is of utmost significance to management since finance is regarded as the lifeblood of business. A budget is a quantitative expression, usually in financial terms, of the future plan of an organization. It includes projections regarding the level of activity, expenses, and revenue. A budget is an essential tool of financial planning. It helps in uncovering inefficiencies in operations, in minimizing wasteful expenditure, and in bringing out weakness in the organization structure. And these are the summary of this chapter. The concept of zero budget based budgeting has been accepted for adoption in the department of the central government and some state governments. So keywords also there. If you feel any words are difficult, you just refer this keyword section. It will help you for more understanding. Self-assessment questions also based on the chapter. First question is, what do you understand by budgeting? Mention the type of budget that the management of a big industrial concern would typically prepare. What is budget and what is sought to be achieved by budgetary control? And what is the significance of budgetary control in modern business? And next is, outline a plan for sales budget and purchase budget. What consideration are necessary in preparation of such a budget? And distinguish between master budget and financial budget. How does management make use of master budget? All these things we discussed. What is a flexible budget and how it is different from fixed budget? And explain the method of forecasting cash requirements. Fill in the blanks question also, true and false question also there. So you just go through it and choose correct answer from the options also here. So do all the questions. It will help you for your term and examination. In between any doubt, you just contact us through our contact number, or you can just comment it on our account box. We will reply for your queries. Okay. So this is about today's section, and for more videos for MBA Ignou journey, you just do like, share and subscribe our channel. Thank you so much.
i-tutor ES presents Ignou MBA, complete syllabus coverage classes and individual semester base, subject coverage program for MBA students, online and flexible sessions. For more details, contact 62382 1788.